All right, that red dot in the top left corner of the Zoom meeting means we are recording another episode of Three Amigos. It is Thursday, 9/10/2020, and not music week, light news week, but real heavy market week all around. So we'll hit the news at the top before we get to the kind of is it the beginning of the end or not in the equities. So this week, we're officially 2 months away from the election. The skinny stimulus is bound to fail today, which is sort of another, cynical ploy in politics. That's the way you play it. And lastly, we had jobless claims come in at 884, which I had a bone to pick on some of that. Are you guys familiar with how they've changed the seasonal adjustments?
No, what's going on there?
So there's more jobless claims than that. Like, not a ton more, but so they used to adjust jobless claims by a multiplier. But now that the numbers are so big, it doesn't make sense. So they went to additive. So they just add something for seasonal adjustment or take it away, I think, in this case, for this part of the year. But the truth is, should there really be seasonal adjustment? I mean, I think there's larger factors at play here than seasonal adjustment. Like a once in a 3-generation pandemic, I think is probably more weighing on the unemployment claims. But I digress. That's still a big number. The continuing claims rose a little bit. And I think that's a little bit of what's factoring into what we've seen in the markets in the past week. So, Dan, do you want to kick stuff off with a little bit of like what happened in the equities? And we'll start with the S&P 500 because it's a good barometer for all this.
Absolutely. Well, as everyone in the world probably knows, Bears finally showed up, took these things down a little bit. And Michael's joyous of that, but man, now he's trying to buy it or something over there. I don't know.
No, it's I'm actually looking in my video because I can see my video where my dome is right there, and I'm watching because I think it's gonna just fall out. But I'm getting chopped up today. You guys trade the roll ever?
The roll's tough. It's something I've always tried. For me, like historically, the roll we would spend a week and a half to 2 weeks. Especially when you're doing the quarterly roll. It's not like crude oil where it's monthly. This is quarterly. When those rolls happen, there's a lot of adjustments that are going on, which it all kind of aligns really nicely here. I saw someone recently say, I believe it was in our Facebook community, topsteptrader.com/Facebook. If you're not in there, check it out. But someone in our Facebook community came out and said, why is this breaking? There's no bad news. Well, I think the stars kind of aligned here. Election season's now underway. End of summer has hit, and we're walking into a roll. We're going into that D's contract, which we're going to start opening up a new decade here soon. You think about that too. We're coming to the end of 2020, or kind of. Never mind. That was random.
We're getting close to it, Danny.
But we're getting end of year, I should say, not decade. End of year. Everyone's making these adjustments. So the break finally happened. It was big. I mean, S&P's, high, marking new highs at 35.85. That broke all the way down to a low of 32.95. So you got 290-point range there, high to low. And that's a 7% move approximately on that break. So finally happened. Michael's been calling for it for a while. And I can honestly say when these markets break like that, this is when I start to step back and minimize my amount of trading just because I struggle shorting. I don't like shorting these markets.
I'm over trading today. I'm down money today. I've made money since Friday's big sell-off. Really ticked off at myself last Thursday because I missed that sell-off, but I caught Friday's sell-off really well. And then got stuck in a short and gave back half my day, which is a great day. I had a really good day going on Friday. Gave back half the day on the rally because who holds anything into a holiday weekend? And apparently the buyers came in, and now it's selling off, chopped up. And last week was all about a melt up. All I heard on Bloomberg was buy everything, melt up, everything. I've never heard melt up, but I've heard that we were talking melt up. You had all the stock splits happen, just like what we were talking about. And the next thing you know, they took everything apart, and you got Tesla was down 30%. So you got people long last week that are down. I'm reading Robinhood channels, and people are saying oh, just buy it. It's buy everything, buy the dips. It's markets only go up. Markets only go. That's such an amateur statement.
One piece of practical advice and then one observation. The practical advice is don't, I don't know if you have your video on Mirror, but don't do that with the trading or you will flip a ticket, right? So if you look into there, you'll see the reverse of it. So if you're trying to trade, just be careful.
Oh yeah, you mean right here? Yeah, I know. I could trade off that looking into the camera, but actually right there, and it's selling off. I mean,
If you're in a slump, that could be your way, like a slump buster.
Well, I'm not in a slump. I'm actually in a good streak going. But then now I'm like, I gave away a good day because I came in today thinking like, oh, everything's going so well, and now I'm up really well. And then I gave it all away. I'm down money, and everything I did was right except for one. And I hate the fact that I had to be right, but everything I did was doing well. And I had one trade that added to on it, and it just shot in my face and rallied up. But the perma bear is up in the last 5 days. The perma bear is alive. He handled the melt up. He did not trade during the melt up until Friday. So I watched it Wednesday and Thursday last week.
Prime example here of humanizing this stuff. I think a lot of people, when we talk about trading, I think it doesn't always come across as we have these days like this that we put us in the exact same position. You're right there right now, Michael. You've been doing this for 20 years. You've been trading, and you had a day, you were up money, it went against you, and now you're feeling those sick. We all go through that emotional roller coaster.
I feel my emotions like kind of like fluttering just because you're upset. I mean,
right, you just said it yourself.
I should be journaling right now. I should be journaling my stream of consciousness and talking out what I'm feeling.
You said it right before we went live. You said exactly what you went through, the exact emotions that people go through. I'm struggling today. I'm getting chopped up. I should shut my systems off. And here we are. We can still see it going.
Oh my God, it's selling off even more now. Oh.
Well, it came off a pivotal level. So
yeah. So
let's talk about the pivotal level. It just came all day long, all night long, coming out of that 3380, which we have talked about for the last 2.5 weeks. 3380 has been a pivotal point. Whether you're buying or selling, it's created opportunity. And right now it just broke off of that low of 3377, I think is exactly what it was. It broke from there. And now we're extending this range lower, which makes kind of sense, right? Because with the stimulus package, the news just came through. That failed to go through again. So it makes complete sense. And so that would be one of my areas of importance to kind of keep an eye on when it comes to the S&P over the next week is going to be 3380. We're about 10, 12 points below it right now.
Yeah.
But 3380 is a very pivotal level.
Yeah, and it was holding up right there. I was doing so we were watching that, and now it's selling off. But they couldn't pass the old skinny margarita, so.
Summer's over. Now it's like the skinny old fashioned.
Yeah. And I told you guys I only have a $500 loss. So I'm down $488, but after commissions, I'm down like $700. It's just a bummer day when I was up $1,500 and I trade 1 lots and 2 lots. And if I had a funded account right now, I probably would have lost it. So.
Hey, speaking of funded accounts,
funded account, I should say. It is a live
well, speaking of funded accounts, some exciting news happened yesterday with one of our funded traders posting just under $27,000.
He put up 38, I thought.
Gave back a little bit. Came back to 27 up on the day, 39, I believe, on the week already. So huge week. Big shout out to him. Really exciting.
I talked to him shortly. That is the MJ of trading, which I like to call great trading days. And if you can put a streak together, an MJ of trading. But he's new to the funded account. Put up about 50-some grand, I think, in a couple days.
Yeah.
So we'll be talking to him. People will be seeing that video or whatever coming up here shortly. But really stoked for him. Talk to him later. But that is some kick butt trading day.
Without a doubt. So, well, just to round up ES here, we did have 3 negative days. We caught that bounce. Market started rally, actually bounced right off of 3,300 even, which was our weekly kickoff low level. So if you're not getting our emails, we pushed 2 points below weekly kickoff low and huge springboard there. So make sure you're checking those things out as we kind of move forward to NASDAQ. Similar, but bigger down. I mean, we fell into a correction territory. We went down just over 10% in the NASDAQ, with a high of 12,408 or 448. And that broke all the way down to 10,930. So we're looking at just under 1,600 points in the NASDAQ range this week. Something I think is worth noting.
Yep, there
we go.
That's March. And that was last week, NASDAQ.
Pretty much. And what's interesting when you point that out, we were just talking a month and a half ago, Apple, $2 trillion company. Well, 6 of the major tech stocks gave back just at the end of last week, beginning of this week, $1 trillion. So Apple, Tesla, Amazon, Microsoft, Facebook, Google all gave back. I think Apple alone was $600 billion it lost in market cap after the split happened in the NASDAQ break and the Dow break there.
Well,
Yep.
I saw something. You want to hear something about the volatility this year? Is so in 3 days, that was the quickest correction ever of the NASDAQ, to go 10% from the highs. The previous quickest it did a 10% correction was at the beginning of the pandemic. It took 6 days. It goes back to 1978. And the 2 quickest are in the last few months. And I think that, this market looks a little different than people talk about. Is this, what was it, June 11th last time we had a big break in equities?
Mm-hmm.
If you go look at your daily chart around June 11th, that was sort of a one and done. It gave a little bit more the next day and then came back. The charts now look a little bit more ominous. They look a little bit more like what we were seeing at the end of February, where you get a number of downs and then like a bounce and then a number of downs. Today is going to be interesting. If we finish way down today.
Well, what I found interesting, S&Ps, if you go to the June 11th to this current break, equivalent measured move. So it gave up this move in 4 days, gave up June 11th, same in 4 days. So it was to the T, giving it back. So if we continue to hold above this 3,300, I'm going to be okay. If we start to look below 3,300, that's where I think we may start to see some corrections.
Yeah, because who was saying that? Malik, you were saying that. I got a friend here I'm coaching and mentoring, said that Robinhooders, yes, there he is. Robinhooders are fully margined. 46% of them are leveraged. That will show up. We talked about picking tops and feeding the melt up. You know how you feed a melt down? Margined accounts, people picking bottoms, stonks, people saying stonks only go up. I don't even know what that means, but
that's Barstool right now.
Yeah, they only go up. So you got only going ups, and then you got fully margins. What happens when it starts to go down, and then your broker gives you a call or your push notification comes in and says you got a margin call? Come on.
You get to pay your margin call like a millennial, like a real millennial. You hit your
Just
little push
Venmo
notification. Just
Venmo it in.
Yeah.
And then put a thumbs down if you liked it or not.
Well,
Right.
we saw that after the big move down. I'm losing track of which days it was. On the open on, what was it, Monday or Tuesday this week?
The Monday night, Tuesday session.
It went down 40 points in the SPOOs, and like right away. That to me screams like, okay, we got some forced selling here. And then it just rallied back, it was up God knows what on the day. I think that in general, though, you just look at that daily chart. We always say that you would kind of know when like the melt-up phase, we may have entered a new phase. If you just look at the last 3 weeks, that is the melt-up. It is so measured, so slow. So like you said, the 1% a day. And I don't know if I believe, yeah. People say that a lot of this is fueled by buying way out of the money calls, that there's been like this huge, people say SoftBank was doing it. And I sound like Trump right now saying people are telling me. I'm just saying this is something that I've heard and I can't remember the source. Is that's something that people have been doing, these like low volume things, forcing people to delta hedge, just goes up and it just feeds it. I think that we're seeing some of the break here. So I would just be careful about, conviction. I'd be careful putting too much conviction in something that you believe in here, because I think we might see the market change a little bit.
Right. I got a question I want to pose at the very end of this, so I do want to throw something out.
Danny, I want to talk about the conviction real quick. One thing I always learned is you can have a strong opinion, have it weakly held, or a flexible bias. In trading, when you get too dig your heels in, you can get hurt both to the upside and the downside. So listen to what Jack just said.
Absolutely. So real quick, NASDAQ, just a couple levels I'll be keeping an eye on over the next week. 11,200 on the low side here. Obviously, it's good. I think it's a pivotal spot. I'm not going to say it's going to hold at the bottom. It may turn things around there. And then on the upside, I'm keeping everything really tight. 11,680. So I think that range is going to kind of give me a little bit of a range. I'm looking at opportunities on the extremes, whether I'm fading it or hopping in looking for that breakout.
Nice. Well, why don't we jump into the Dow while we finish our conversation? We're kind of, on the side talking about other things.
Wow, the Dow, 2,000 point range this week. 2,000 point range since last Thursday. Huge range. So our low was 27,185. Our high is 29,180. So 1,995 point range in the Dow. That's astronomical. We got pretty darn close, a few hundred points away from all-time highs, but didn't get there. So Dow's still struggling a little bit.
Well, you did have your fresh legs Salesforce.com come in there. I mean, the young.
Well, we got the millennials coming in
there. Hand me the baton. I'm going to run. They try. I mean, it's moving. It's moving.
It's definitely moving. We're seeing some participation there. You got Apple's just steadily just tumbling. I mean, each day it's down another percent. So Apple's taking that hit right now. I don't think that's long-term. I think Apple does overall hold out and do well. But it got the weights of everything with the adjustments with Apple splitting stock. The weight of it has changed. And so it makes kind of sense that the Dow should tumble, especially going into the roll, especially questions of stimulus. Makes sense.
You know what else?
We talk about.
Go ahead, Jack.
We talk about the Warren Buffett strategy. That's like you hold a long time and you make 10% per year. It was never supposed to be 10% every 2 days for numerous months.
Right.
I mean, ridiculous.
So we had last week was the melt up. Last week also I was getting texts from my financial planner friends and all that, Merrill Lynch guys and whatnot. Hey, my client's daughter wants to buy some Tesla. So when you got I haven't been in a cab in a while because of COVID, but when you got the cab driver telling you to buy something, or you got your client's daughter, who I think she's a TikTok famous TikTok girl, wanting to buy Tesla last week. Oh my God, we're selling off even harder right now. But
those are signs to get out.
Those are signs to get out, or they're signs to get short. As a permanent bear would definitely be on top of all that.
But I have, stories I could tell you now with Tesla, though, because it would have been just as ridiculous a month ago, and you could have been destroyed.
Without a doubt.
Oh yeah, exactly.
Absolutely. So, anything else on the Dow, or I want to hear with this final story, or there's a final question that Dan.
So I just want to propose a question. I think it'll be interesting to look back next Thursday. So we have 5 days here. Higher, lower, stays the same. We're gonna go around the horn. I'm kicking it to Michael.
Oh, where the three
equities in general,
amigos, the three brothers,
three amigos.
Yeah. Well, I don't have the picture anymore of my perma bear, but I'm still selling this. I think we got a lot of the retail. I got a lot of people that from the melt up that are stuck in trades. Wishful thinking right now. Wishful thinking, hoping, crossing fingers. And then having their Facebook groups or new investor Facebook groups just say buy more because it always goes up. So I think you're going to squeeze the hell out of these people. And I think the retail washout is going to start feeling, I call it the retail washout, where they wash out all the retail folks or the people. They always call it too, the week longs is what they call it too. If you're a week long and you get stopped out or flushed out. So I'm still of the camp that this is rolling over. I think these highs that were just put in on the melt up may be stuck there for a while. So we're going to probably come up and test them again, sort of. But that is the play I would do is I would be selling rips.
All right, so you're bearish.
Yeah.
Jack, what do you got?
Yeah, I'm biased. I would be bearish if we're talking like the 1 week. Obviously, I would never discourage anyone who's a long-term investor from just, set it and forget it. And that's part of the reason that I am a perma bear is because I keep my trading accounts separate.
Yep.
So it's more of a hedge thing anyway. So I have a naturally short bias and that sort of stuff.
Mm-hmm.
That being said, I think there's a noticeable change in sentiment right now that we haven't seen. This is the first time in a long time I've actually seen the longs kind of, not things only go up type thing. So with that sentiment break, I think it will go lower in the short term here. I'm trying to think if there's any. I had one other sage point. Okay, here comes the bull. Dan, tell us why.
Danny, before you do that, there's the Congress hasn't given everybody money yet to prop up the market again. The skin
I know. No, I'm just when
I remember
Michael,
my point.
When you
Dan,
said I don't have my picture anymore, I still had mine, so I had to pull it out for a second.
I mean, crazy. My last point is that there was a lot of people out there that we thought we were at a very overvalued point. We were in a melt-up mode into February this year. Things are going. The S&P 500, for instance, has been increasing at an annualized rate at a pretty unsustainable rate. I think we gotta come back into line a little bit with our GDP at some point.
Yep.
And then the very last thing, which I can't keep my thoughts straight anymore, I should learn to journal and outline as well. Well, that's it for now. I'll remember for next week.
All right. So I'm not actually going to be bullish here. I think we're going to start to kind of just establish a little bit of a balance. I think we're going to start to range out for the next week until we get some more information. We didn't have any news this week. And the fact that there was no news, I think this price sell-off was kind of the end of the melt-up. Sellers just kind of overpowered. We established we were looking for new balance in the auction process here. So I really do think we're going to kind of balance out for a little bit. And I think we're just going to see spikes over the next month or 2 months until elections. I don't think you're going to see a lot of directional trade one way or the other. So I think we're going to see some balance and some pretty defined ranges over the next week.
Yeah. And watch the dollar. That was my last point. That dollar starts going up. If they stop thinking there's going to be that same faucet, that's going to kill stocks in the short run.
Yep,
Absolutely.
No, I agree.
Awesome.
And if you're not feeling it, if the market has taken your day away and put you in the negative, you should probably shut your machine off and go work that tension out with a double the run that you normally would do workout.
All right, Michael, I can pull my risk manager here, and I can shut you down for the day if you want.
Let me observe. I'm going to observe to the close.
Yeah, double zero is still zero, so for me, the run. Anyway, so that's what we'll leave here. That's great advice, Michael. And we'll be back next week to see which of us are right or if all of us are wrong. But tune in next time. Hope you're all having a great time out there and have a nice weekend. Stay safe. We'll see you next week.
Absolutely. And then September 11th as well. So everyone lost on that day, please keep those guys in your thoughts.
Mm-hmm.